Race live with the mortgage calculator. We will wait just a couple minutes here to get started. Let us go live on all the different platforms. But today we're going to be doing a presentation of some live mortgage rates. And then we are going to talk about how to go about a fix and hold investment. We'll wait just a couple minutes though to get started. Let us go live on all the different platforms here. And in the meantime, feel free to drop a comment as you tune in. I appreciate the comments coming in already from Warren, Adam, Ashley. Thank you for the comments. We'll get started here in just a moment. Now, you can also feel free to drop questions as we go through the deep dive topic here today. And keep dropping those comments as you tune in. We appreciate them. Thank you for tuning in nice and early. Julie, Julio, thank you for the comments. And thank you for the comment. Dario, thank you for the comment from LinkedIn. Owen, thank you for the comment rolling in. Appreciate it. And it looks like we are live on all the different platforms, so we can go ahead and get started. As we continue, though, here, feel free to continue to drop comments there in the chat and drop any questions that you have as we go into our deep dive topic here today. But looks like we are good to go, so we'll take the chat off the screen and we will go ahead and get it started. Welcome, everyone. My name is Kyle Hershey. I'm the COO of the Mortgage Calculator, joined here by President Nick Hershey and our sales manager, Jose Gonzalez. We are a correspondent lender that specializes in non-QM loans. And every morning we do this daily rates live show where we go through live mortgage rates for different programs. And then we do a deep dive into a different topic every day. Today's topic is something we're familiar with here at the Mortgage Calculator because we do so many investor loans, which is fix and hold. So we're going to talk today about how to go about a fix and hold investment. So not necessarily a loan type, but essentially a way to go about accomplishing the goal of doing a fix and hold. So we'll get into that here in a little bit. Our sales manager, Jose Gonzalez, with 28 years of experience as a loan officer and a realtor, will do a deep dive on fix and hold here momentarily. But before we do that, we'll go and do what we do every day, which is pull up our pricing tool and see what the rates are looking like. So Nick, let's go ahead and pull up the pricing tool if you're ready so we can see what the market is looking like this morning.
All right, let me change my screen. So this is our pricing tool for our team. If you would like a full breakdown, a full loan estimate, please get with one of our team members. We have over 400 licensed loan officers in 24 states, and we can do our fix and flip in 44 states. So this will show us the general rates and the APR for today. It is September 12th, just after 11 a.m. So we'll set up a scenario and compare across all the loan programs. We'll set up a loan amount of $400,000 as we do every day. We'll set an LTV of 80% loan, 20% down payment as we do every day. We'll set the desired price to 99, which means we'll ask the computer to find the best rate at one discount point in cost. And we'll compare our programs conforming conventional to FHA, and then we'll check out our non-QM expanded guideline options. VA is only for eligible vets and active service members. If you are eligible, let us know. We can quote it in just seconds. And USDA is only for properties that are USDA eligible. If you are shopping in one of those areas, just let us know. We'll start with conforming conventional. We'll do a purchase, 30-year fixed, primary occupancy, single-family home, 1 unit, state of Florida, county of Miami-Dade. And for all the demos, we use an estimated FICO score of 760 and an estimated debt-to-income ratio of 40. So with these settings, let's check out the rates today. Looks like a little bit higher than yesterday, 7.375 for 0.75 discount points and costs. That's our final APR at 7.533. So if our customer doesn't qualify for a conventional program, usually the next option we want to quote is an FHA option. So we'll pull up FHA, we'll keep everything else exactly the same, and we'll check out the FHA options that allow our borrowers a little more credit leniency and a higher debt-to-income ratio. So the FHA is about the same as yesterday, 7.49 rate, 1 discount point in cost. 7.082 APR. So you can see in this example, FHA is actually quite a bit cheaper than conventional. If our customer qualifies for both, it's about a half a point cheaper in APR cost there, even with all of the mortgage insurance required for FHA. So customers that qualify for both definitely check out the FHA options. Now, if our customer doesn't qualify for conventional or FHA, many other banks or lenders don't have any other options, and that customer is denied. Fortunately, here at the Mortgage Calculator, we have 5,000 additional options under expanded guidelines where we can use alternative income. We will keep everything else exactly the same. However, we have a new option pop up for income verification. So full doc is what we use for FHA and conventional. That's 2 years of tax returns. So we'll typically choose a non-QM program to take advantage of one of these alternates. We have asset-related programs, business bank statement programs. Our investor programs are only for investment properties. We'll pull those up in a minute. Personal bank statement 12-month is what we use for our demo. That's the most popular by far for our primary home. And we also have RSU, stated, VOE, 1099, P&L, no income, CDFI, all kinds of different options. The most popular, though, is the personal bank statement 12-month, and that's for our self-employed borrowers. Many times our self-employed borrowers are the ones that have trouble qualifying either at all or may just not quite be able to get as much income because their tax returns have various write-offs as a business owner. And in this case, we'll solve that problem by using no tax returns at all, just their last 12 bank statements, to determine a debt-to-income ratio of 40% in this example, using just the cash in the bank, no tax return at all. So most of our self-employed borrowers qualify for double or triple the income using this method. So let's check out the non-QM solutions today. About the same as it was yesterday, 7.5 rate, 2 discount points in cost, puts our final APR at 7.6. Remember, conventional was at 7.5 something. So here we have a non-QM bank statement option for our borrower at almost exactly the cost, just 0.1 higher in this example. And we have a ton of different options here. Some of these other bank statement options you see as we scroll down, there's hundreds of different versions. Some of these other ones may allow things like credit events, like foreclosures and bankruptcies, and other guideline issues that would cause us to not qualify conventional. So not only can we use alternative income, a lot of these other programs at a little bit higher rates and costs will allow us to get around other guidelines as well. Now, we do a couple live examples. We'll switch it up to investment properties. So our final 2 demos, we'll always do pricing for investors, whether they're first-time investors or seasoned investors. We want to show the different options here. So we'll set up the same scenario, 80 LTV, 20% down payment, and we'll compare our investment property options, our conventional options, to our non-QM expanded guideline options. Remember, the government programs do not work for investment properties, so FHA, VA, and USDA are not eligible. We'll start with conventional. Keep everything else exactly the same. All we've edited here is the occupancy. So we can see the adjustments that the conventional programs have added for investments. And about the same as it was yesterday, 7.625 rate, 3.625 discount points and costs, puts the final APR at 7.879. So a good option for our customers that want to qualify conventional full doc. However, there are no options for 1 discount point, which is what we asked the computer to find. 3.625 discount points is a lot of money, $14,500 in this case. Most of our investors want other quotes, other options that have less discount points and costs. So unfortunately, with conventional, with the changes they've made, they are very costly here, and we can't increase the rate to lower the cost, really. So that's where we love to present our non-QM options. So for the final demo, let me set up the same scenario, investment property, 80 LTV. And this time we'll check out expanded guidelines, also known as non-QM. So for non-QM, first we must select the income option. Most popular for investment property is going to be the DSCR. And that's because it doesn't require any income or employment from our borrower, simply uses the estimated rental income from the property to determine a DSCR, stands for debt service coverage ratio. If the estimated rents can cover the expenses, aka the property cash flows on a monthly basis, that's a ratio of 1.0 or higher. We even have options for under 1.0 for properties that don't quite cash flow. For the demo, we always use 1.5 so that we can see all the options pop up. And we always select 3 years for a prepayment penalty. That is standard for a non-QM investment property loan. There are options for 0. We could click this, but not as many options will show up and it will cost more. And same with 5 years. Not all the options will show up, but it will save our borrower some money for those programs that do allow it. 3 years is the most common, so we always select this in the demo so we can see all of the most common options. So let's check out the DSCR rates this morning. Top here, 7.875, 0.975 discount points and cost puts our final APR at 7.941. So just a touch higher than conventional, just about 0.1 higher than conventional. So most of our borrowers that see a DSCR or any other non-QM quote next to conventional, I'd say 90 to 99% of them are choosing these DSCR or other non-QM options. That also goes for what Jose is about to present, which is when we're becoming an investor and coming out of a fix and flip or any of these other things. These are definitely the preferred loan options. So you see we have a ton of options here. So some of these may allow foreclosures, bankruptcies, other credit events. Some of these may allow short-term rental income, very popular request. Some of these may have different seasoning requirements, which I know Jose is going to touch on here for our investors. So lots of different options for our DSCR. Definitely our favorite program, especially when it's almost identical in cost to conventional. Definitely recommend all our investors out there check out the DSCR options. All right, let me go ahead and switch my screen. And we'll go into our topic for today, which is going to be on fix and hold loans. So typically, a lot of investors that request pricing for our DSCR loans that we just went over are coming off of a fix and flip. They've just finished a project of some kind, whether they paid cash or they did the fix and flip financing we went over yesterday. A lot of investors, once they're done, either need to sell or refinance, obviously, to pay off the short-term bridge loan that most fix and flip loans are. Or obviously, if you pay cash, cash is king, right? You want to get your money back as quick as possible. So if you can't sell a property that you've worked on, typically a refinance is the best option after that short-term bridge loan. Or if you've used your own cash in the bank, has come to completion and the project is ready to go to either sell or refinance. So Jose, if you're ready, let's have you take over. You should stand up a little higher. Your camera's freaking out there. Are you frozen?
Uh-oh, looks like he might be frozen.
Yeah, I think he did get frozen for a second there. His camera was going crazy.
You there, Jose?
Come back, Jose. Here, maybe I'll take him off and put him back on. See if that helps. Nope, he's still frozen.
Definitely still frozen. I guess we'll give him just another minute here. All right, well, I don't see him coming back in here, so maybe we can't pull up some examples, but I guess we could talk a little bit more about the fix and hold, just like you were going over there, Nick. Essentially, there really isn't a fix and hold loan, right, Nick? We're talking about essentially today, we're not talking about a loan type. We're essentially talking about a strategy here, right? A way of doing loans, right? Or a way of accomplishing your fix and hold goal. Right, Nick?
Yeah, so I mean, there's two options: you sell or you refinance. There's no option to have a fix and flip loan for long-term. They're short-term bridge loans. So there's no such thing as a fix and flip loan that lasts for any sort of long-term financing. They're typically interest only, and they're typically 1 year, or sometimes can be extended another 6 months or 1 year. So most of our borrowers need to figure something out before that time expires. So the options that Jose has are going to be discussing the seasoning. It's all about the time that the project is finished. There's very few no seasoning options, which we do have. And then there's more common of a 6 month seasoning, I believe is the next option that we'll have. And then obviously there's the conventional seasoning mark, which is going to be 12 months, which is what most people are probably used to. However, we do have new options for the DSCR particular. I don't think there's any sort of conventional or even bank statement options typically don't allow the lower seasoning. That is typically a DSCR feature that we have there. So the DSCR investors and lenders and programs are definitely set up for some of them, the ones that Jose is about to show you, hopefully, if you're good there, Jose, for the different seasoning options. So are you good there, Jose?
Yes, sir. Sorry
All right,
about that. I don't know what happened there. Little technology glitch.
Your camera was going in and out, and then it
Yeah.
totally froze. So I think your camera was tweaking.
All right. So let me share. Yeah. So basically, what we're doing here, like what you were mentioning, is we're showing the transition from the flip to the hold, right? So it is very, the investors now more than ever are loving the high rents that these properties are obtaining. So it's great to have the option of either fix and flip or fix and hold. You know, they really like how it came out. They may decide they may want to keep that one. So we have some strategies here that should really get taken into consideration at the beginning of the deal, as you discuss either fix and flip or fix and hold. So this is an example that I shared yesterday. Our experienced flipper, our $300,000 ARV property with a $202,500 loan. And I think in this scenario, our flipper got like a 10.99 percent rate, but that is a bridge loan. It's good depending on the term, anywhere from 12 to 18 months. So
for this assumption, go back up there. So 300,000 is our value right now that the property's done.
well,
it's worth 300.
I'm thinking maybe a little bit more now. 300 when they did the deal originally. Maybe 3-4 months have passed by. A couple of good comps, right? So I'm figuring 325.
Okay.
Um,
And then their total cost here was a $200,000 loan, but I see
202,500.
but 226 with all the costs, right? So
Right.
their nut there is 226 of their initial
Right, closing
investment.
costs and interest reserves and all that kind of stuff that they had to put
So
into the deal.
In this scenario, if we're doing like a rate and term, 226 is kind of our number that we need to cover. If we're trying to get
Right.
cash out, obviously we're going to exceed that number.
Yep.
Okay.
Correct.
All right. Let's fire it up.
Or try to get as close as we can, right?
Yeah.
So here is our first no seasoning. So we got them a little money here at 75% LTV, right? So this is for the deal where it's a quick turnaround on the renovation, 30, 60 days. He has his good crew standing by, and they were able to knock everything out for him. And the main thing to consider here is that with this option, there is not any seasoning requirement to be able to use the current market value for the appraised value versus the purchase price plus renovations, which is usually what happens when you don't meet the seasoning requirement of a loan, right? So they would have hit us with 150,000, which was our purchase price, plus 75,000 in renovations. We'd have been at 225 on the appraised value, which wouldn't have even allowed us to cover anything. Actually, that's pretty much a little bit less than what we owe.
And for the seasoning, how do we measure that, Jose? Just go over real quick.
Okay, seasoning on that. Now, what we're talking about is seasoning on title, how long they've been on the note of the current loan to the application date of the current loan. But you may want to check because sometimes they go note date to note date, and sometimes they'll go note date to application date of your current application. So you would have to check your guidelines on that.
So this one has no requirement whatsoever. So
Correct.
this one, we don't have to worry about that. But your next examples, there's
Yeah.
going to be a hard stop on a certain day. Right?
Correct. The good thing to note about this one is that not only is there not any seasoning requirement to get the value, the current appraised value, for this one, you only have to be on title, officially on title already, uh, the day before the loan application. So you could be on title today and refinance it tomorrow for the current market value. Uh, the other important thing to note with this option is that it also is applicable for first time investors who are also first time home buyers who also do not have a primary housing expense. Now, that's really important to note because in the DSCR world, um, being an experienced investor will get you usually a little bit better rate, and having a primary housing expense, whether it be a rental payment or a mortgage payment, or your home is free and clear but you can prove that you paid last year's taxes, right, that would be considered primary housing expense. You would get much better options, which I'll show you in a minute. But in this case, you would still be able to obtain the loan without having to meet any of those requirements, which are usually requirements on DSCR loans. So you're still getting a good rate here. You're getting 9.5 with a little bit of cost there, and you can buy it down to 8.125%. So this is an amazing option. And not only that, I'll add another little extra point of interest with this product. It also does not season nor source large deposits. So if it's a purchase, the money just showed up in the account, don't no worries. You're not gonna have to source it or season it or anything like that. Right. So very good option for your investors. So that's our no seasoning requirement. Now, our 6 month seasoning requirement for inexperienced investor. Again, this is another thing to consider. We could have our investor that is doing, maybe they're doing their first property that they're going to own. Uh, you know, maybe it's they were inexperienced in flipper when they got in it. Now they're going to be inexperienced investor. This is a good option to be able to do the loan. A little bit better rate here. 9.5 gives you a little bit of a lender credit. It is 6 months seasoning. Again, no sourcing of large deposits nor seasoning of large deposits either. Will allow a first time investor, and will allow also somebody that only has a housing expense. So it's a good option there. And now we have a much better option you're going to see in the rate. This is our DSCR option with 6 months seasoning for our experienced investor. Now you'll be able to compare the difference of our experienced investor that does have a primary housing payment. Again, it could be that they own their primary, could be free and clear they're paying, they can prove they pay taxes, or it could be that they're paying rent somewhere. But you will see with this option, look at those rates now, much, much better. And this is only 6 months season. 8.375 actually gives you a lender credit, and you can buy that down to 7.375 which is an amazing option. So now we're gonna throw you a little twist here. This is our full doc option. This is a conforming loan that does use automated underwriting. Now, it's not exactly a Fannie Mae conforming loan, but it is a conforming loan that does use AUS to underwrite, um, and will not allow you to close in an entity, right? So that's the thing to know. Will not allow you to close in an entity, just like Fannie and Freddie do not allow you to close in an entity and does use automated underwriting, but it is 80% cash outs. Oh, by the way, this option also is a special option that does not have such a large loan level price adjustment like Fannie and Freddie do on their investment properties and second homes. That's why we are even able to obtain such a great deal. 8.5% is costing you almost a point, and you can buy that down to 7.75%. So again, very special option, 80% LTV. And then last but not least, we do have, this is a brokered option, 80% no seasoning DSC. I saved the best for last. 80% no seasoning, 80% LTV cash out refi, DSCR, right? So just gave you one of the rate options there. So very good option here as well. This one,
That one's just a little more expensive, so it's
Yeah.
kind of separate, right?
Yes, correct. And since it is a brokered option, I only offered one rate out of their rate stack, but there are some buy down options available. So here you're looking at 9.375, costing you 2.75 points. But it is the way to get to 80% if that's what your borrower would like. However, the 75% option, if you look at it here, and if you go with 8.375 with a $366 lender credit, you're only 2.25% off. So you're if you're comparing one to the other, what would that put you? 2.25% away from the other rate, which was much higher, 1% higher. So you can mess around with it like that. And if your borrower absolutely needs that extra 2.25% in LTV, then you could go for the other option. But again, also one thing to note, the other option is no seasoning. So that's very special to consider there when you compare it to our other no seasoning option that was at 9.5%, right? And our other seasoning option was 9.5%, costing a little bit over 1 point.
All right. It looks like we do have a question here. If you want to pull that up on the screen from Leonardo asking, is there a purchase plus renovation loan for full doc, like for a primary home?
Absolutely. That would be a renovation loan, which you can use. There are conforming renovation loans. Fannie Mae and Freddie offer those. And for primary, and they actually offer it also for a 1 unit investment property as well. Now, for the primary, they do go up to 95%. For the investment property, obviously, it's going to be a lower LTV because it's an investment purchase. But that does allow you to do the purchase and the renovation in one loan. And then FHA also has their 203K, which is another program geared for primary. The conventional could be primary, second home, or investment. FHA is obviously going to be primary only, but they do have the 203K streamline option, which allows up to $35,000 without having to use a HUD counselor. And then you have the regular option, which does require the use of a HUD counselor, but no $35,000 limit. And then USDA and VA also have their own version of renovation loans as well. that could go to the full LTV of 100% for each of those options.
Great question there. Just they're all going to be full doc, right, Jose?
Yes.
All of them, those are going to be full doc, as opposed to the DSCR options we're talking about today, or no income verification, no employment verification, all that kind of good stuff. All right, I don't see any other questions. So great training here today. Great information. Again, this is how we do a fix and hold, but we're coming off the fix in the first place, right? So we're doing a short-term fix and flip loan, and if we decide not to flip it, then we can hold it, and these would be our methods of essentially refining out of the fix and flip loan. So thank you, everybody, for tuning in. Remember, we do this 11 a.m. Eastern every single weekday, where we go through the live rates and do a deep dive into a different topic. So we'll be right back here tomorrow with a new topic. Thank you, everyone, for tuning in. Thank you, Nick. Thank you, Jose. And we will see you all tomorrow, 11 a.m. Eastern, for the next episode of Daily Rates Live with the Mortgage Calculator. Have a great day, everyone.
Thanks, everybody.